Iris, you had a forecast of 9.2%. You didn't completely nail it, but you were close. The number was 9%. Your reaction?
First is that the administrative measures that everyone focused on and why others are forecasting a lower PPI inflation is that they focus on the administrative measures. But the administrative measures actually have the effect only since the last week in May. So that doesn't really count for the full month of May, and we still see a very high PPI inflation. And that comes from metals. And I know that your next question will be, what will the administrative measures going to last? So for me, it will only going to last for a bit, because the global commodity markets prices is not only driven by China needs for infrastructure. U.S. is another big demand for metals for their infrastructure projects. So the global commodity prices cannot defy the gravity. And if China continues to use administrative measures to calm down the commodity market domestically, it could end up with some arbitrage trade between the domestic China market and the world market.
Okay, Iris, what does that tell you then? How does that inform your view about these factory gate prices as we look towards the end of the year?
As you have said, this will actually this cannot be passed on to the consumer completely. First of all, domestically, there are some small lockdowns in China, Guangdong province. So the demand for goods will be a little bit soft in the coming month. And for the overseas market, the recovery has just started. So it is impossible to pass all the costs to consumers, even in the overseas markets when COVID is subsiding. So what's next is that producers have to eat up these costs, and profits of producers in general, especially the metal producers, they have to eat up the costs, and therefore slower profit growth in this quarter.
How long does that last, though, Iris? Because at some point they're going to have to break, right? These downstream producers that are continuing to absorb that inflation shock. How sustainable is this sort of condition?
The first thing is that there are some producers making profits out of this rising commodity prices. They have to share their profits with those downstreams. So it could last quite long in terms of this kind of sharing.
And I think we may have lost Iris. Oh, no, we got you back, Iris.
Sorry.
Keep going.
Yeah, and the other thing is that we will see that consumer recovery will pick up, and therefore some of the producers' prices can be passed to consumers, but not now, maybe in the fourth quarter of this year.
Iris, I was looking at all your forecasts, and it seems like you're very upbeat when it comes to the services sector in China. I believe you have the highest forecast among your peers when it comes to official, as well as the Caixin services PMI numbers, as well as the PPI numbers here today. Do you think you're too optimistic?
Not really. I believe that if COVID, the small COVID numbers in Guangdong province doesn't last into the summer holiday, then service sectors will pick up, and there will be a lot of internal tourism, domestic tourism activities. That all depends on how the COVID in Guangdong is developing, because we know that the internal travel means that people from the north will travel to the south, and people from the south will travel to the north. But without cross-province travel, this cannot happen. So it is actually now a risky moment of my forecasts, really, if COVID lasts longer. than expected.
Yeah, indeed. Iris, what is the PBOC response given the data that we're seeing at this stage?
I don't think the PBLC is going to respond to CPI and PPI for this year and next. Their work is focusing on the leveraging in the real estate sector and also the fintech. So they are very busy on the leveraging, and on the other hand, they can't tighten too much on liquidity, on the daily liquidity. So they are monitoring the everyday 7-day rates. So the focus of PBOC, if you want to monitor the PBOC's direction, you should focus on the 7-day rate rather than on the liquidity volume, because the liquidity volume is to stabilize the 7-day rate. So I think the 7-day rate will be very close to 2% and stabilize there and for 2 years.
Okay, you're also forecasting more strength for the currency, 6.3 by the end of 2021. How does that square what we're hearing from officials here, current officials, former officials, about wanting to weaken the currency?
6.3, I think, is not the strongest. What I'm thinking is that I already priced in the volatilities of the dollar CNY this year. I believe the high-low range could be as high as 13%. So it is really volatile. And for now, we see some softening of the yuan because of the PBOC's spoken language. And I believe that after a while, it can't defy, again, the market's appetite for the yuan. From the IIF report last quarter, we have very strong inflows into China equity markets. So this could continue in the second quarter if COVID doesn't grow tremendously. So this is really China recovery story and also a weak dollar story.